Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
This week's strategists are pretty positive about the two companies that they're going to talk about. Brian Boland and Kevin Cook here with me to favor you with their top picks of the week. One very recognizable, the other maybe not so much. You got the one that's maybe not so much. Ellie Mae is your stock, right?
Yeah.
So I have to assume right off the bat that this is not one of the Clampetts in the Beverly Hillbillies.
No, it's not actually.
Okay.
But it was a good guess.
Okay.
But it is, somewhat associated with, like the Fannie Mae and the Freddie Mac and all that, because it is playing in the world of mortgages.
Okay.
And that's basically the idea behind this stock and why I like it for this week. As we say, top stock picks of the week. There's a big event this week
That may
that's
help.
coming up. The Federal Open Market Committee,
That may benefit
FOMC,
this
are
company.
going to make some sort of decision, and that's going to affect interest rates.
Right.
We expect that there's not going to be a move in from the FOMC, so I think that's going to keep interest rates low. More home buying volume obviously is going to help. There was even data today. The NAHB was come out much stronger than expected, so a lot of home builders are up. So this stock is also feeling a little bit of that right now. So if we take a look at the screen here, we see that it is right now is Zacks ranked number 3. And that's mostly because the earnings estimates have been, the moves there have all been factored into it, and the 60-day window for those estimate moves has closed. But we have the growth style scores, or the style scores of what I love to see. We have a A in growth and an F in value. And I love to see the divergence between growth and value, because it tells me I'm on the right path, because a value investor looks for something completely different than what a growth investor is looking for. So the value, when that's an F, then the growth in A, I'm right in the wheelhouse of what I want to see. Exactly. Give me that big F. So let's take a look at the price and consensus chart here. This is one of these tools that we have here at Zacks that really helps you out. Gives you an idea of how the stock has been over the last few years and how it's been reacting to earnings estimates. We can see, a few misses here when earnings estimates were coming down, but ever since 2014, this stock has just been a nice, slow, steady upswing here, and we even see the estimates really moving up here. The big gap that we see between years 2017 and 2016 tells me that there's a great earnings growth as well. So great earnings streak here where you've been beating the number, so that looks good. Obviously, the earnings growth is great. And then finally, one last thing that I want to show. Now, this is the FedWatch tool from the CME Group, and it tells us, the probability of a rate hike coming this week. Right now, it's at 15%. The previous day's number was 12%, so it's a tiny touch higher. But in the great scheme of things, it is very unlikely that rates are going to be changed, moved up or down.
What a shot they have to teach the market something, though. If they went ahead and hiked.
You don't really, So who's in control of this thing? We are, not you. But, it's been priced in, and that will, indirectly help a stock like this.
Okay. Kevin, you have the very recognizable Facebook.
Yeah, Facebook, not a new story, but I think that they're doing something that we need to pay attention to. They're doing a lot of things. Advertising, the advertising model on television is still alive and well, but it's growing fantastically on the web, and Facebook is innovating ways to do it to take on Google and AdWords. So they're doing stuff with video. They're not just targeting ads to you. They're learning how to retarget stuff. And they have this new technology called a pixel, where an advertiser can come on there and be able to track everything that's happening with their ad. Now, we're not just talking about the Fortune 1000. There are tons of small advertisers, small businesses and individuals who are learning to use the tools that Facebook offers, and that's where the growth is coming from. Let's take a look at my page here, on the detailed estimates page. What kind of growth are we talking? Well, look at this revenue growth for this year. Over 100%. That's going to be $27 billion this year, and it's going to slow down a little bit. Next year, we're going to grow at 33%. They're going to do $36 billion. There's your EPS growth down here, triple digits, slowing down to double digits. But investment managers, hedge funds, will still pay 40 times for this kind of growth, and they're going to continue to do so because Facebook will continue to innovate. Facebook has something they call lookalike audiences, where they're going to go out because they collect more information on their users than anybody. They can not only target to who you want to target to. If you're an advertiser, you can find a lookalike audience. Who might be the profile that wants my product?
Wow. And
so Facebook is finding ways to bring you the eyeballs and clicks that you want to go to your website and take advantage of your offer.
Okay.
So it's an advertiser can then fine tune it, go in there and look, what's my cost per lead, and really get an idea, what am I paying for that lead, and then they get all the metrics too. So right now, you could make the argument against Facebook that the revenue has climbed so dramatically because you have people piling in to this. Everybody says, well, this is where I'm going to find my next 1,000 leads for my business is with Facebook advertising. So maybe they're paying too much, and so maybe it drops off, and that's what next year looks like. But I continue to believe that this model will just keep evolving, and people will find ways to tune it. Because if they can look at, hey, this is what I'm spending per lead, then they can dial it up or down as they want to. And I've been listening to a bunch of small network marketers in the past few weeks here who are using this, and they're like, hey, we're spending $1,000 a week and seeing a return on investment that really suits us, and we'll keep doing it. So, but the competition is obviously not going to stop innovating either. I just got a research note this morning about Snapchat coming up with, they're doing something called an audience match, lifestyle categories, and their own lookalike adaptation. So advertisers are going to Snapchat too. So Facebook will have to continue to innovate here, and I think they're going to do the job. That's why I want to own it here. I think it's got 25% upside the next year, 50% upside the next 2 years.
So what's the stock price around right now? Do we know?
Trading just below 130, I think.
Right.
So no danger in your mind at this point anyway that's getting too top heavy?
No. The valuation is rich, but you're paying for that growth. As Brian just did we'd like to see an A for growth, and hey, if we got an F for value, we'll deal with it, right?
Yeah.
And that's the kind of story you have with Facebook.
It's an F for value and a B for growth right now for Facebook. So it's priced how you would expect it to be.
Yeah.
Okay.
Yeah. What I say is, hey, do you mind paying $130 a share? Okay. Then wait for it to come back, but buy it at 120 because it's not going much below there.
All right. Thanks, guys, for that. And don't forget, you can always find more stock information on our website. There's stock picks, stock picking strategies, commentaries. It's all there. Link to it all off the homepage, and that is at Zacks.com if you're not there watching this video already. With Brian and Kevin, I'm Terry Ruffalo.